Hey, good morning. Let's go over today's trade plan. So in the overnight session, buyers were active at the 2120 support, and from there, ES pushed to a new all-time high and has been balancing within a range. Heading into the open, the buyers are in control, and we do have bullish time frame alignment. So our short-term bias is going to be bullish here, but with the understanding that ES is trading at fresh all-time highs, and we are going to have to see continued upside momentum and participation from the other markets in order to continue higher and really continue printing new all-time highs. So into the open, we have short-term resistance at 21.31 to 33. This is not really major resistance. It's just based off the overnight high. And then beyond the 33, there is no hard resistance. So based on the types of ranges we're seeing in the market and the current level of volatility, the 43.5 to 46 is an area that could attract sellers, and we could see that area become a hurdle. But just keep in mind that beyond 2133, there isn't any hard resistance because ES is making fresh all-time highs on the futures contract. On the downside, the first area of support is 2120 to 2275, and holding above that zone tells us that the overnight balance is still intact, and from there we can just continue balancing and then eventually still break out and print fresh highs. In the event of a break below the 2120 level, that would mark a break below the overnight balance. So at that point, we have to be a little bit cautious on taking long setups immediately below it. It doesn't mean that buyers can't step in. We just need to allow any short-term momentum on the downside to exhaust itself before we look for longs again. But because we have time frame alignment and the market is clearly bullish, unless we're breaking down on some very heavy downside momentum and broad market weakness, we can still expect buyers to be active at the next key zone. So 13 to 14 is still a potential area where buyers can be active, and then 2108.75 to 2110.75 is for the most part an automatic long in most scenarios, and the same goes for 2102.5 to 2105. Now, ideally, you don't want to see that steep of a pullback. Ideally, even if the market breaks below 20, buyers step in at 13 to 14, or worst case scenario, by 2108.75 to 1075, and that marks the end of it. And then we reverse back up and go back up into the 20 to 23 area and possibly beyond. But in the event that we do head lower, these are now going to be strong areas of support below, and for the most part, they're going to be automatic long setups. So absent any heavy selling in the markets, those would be very good areas to look to get long. On the short side, we have to be cautious here because the market's not really at any major resistance. It's making fresh all-time highs. Buyers are clearly in control, and we can't really take short setups based on location alone. Now, it doesn't mean that a short setup can't develop in real time intraday, but it would have to be based on something in real time. It would have to be based on a momentum idea or a pattern that develops in real time where there is clear rejection, and even then you would have to secure fairly decent trade location to be able to really get much out of it. So right now our focus is going to be on the long side, and we're going to be careful and cautious on taking any shorts, and if that means no shorts today, then that's perfectly fine too. In this environment, it makes sense to keep an eye on the other markets because even though ES is making fresh all-time highs, the other markets are not, and they do have defined resistance areas within NQ and TF. So at the very minimum, it would be helpful for everyone to pull up a daily chart for NASDAQ and Russell and just be aware of the major areas, major swing highs, from the past, and just be aware of those so that as NASDAQ and TF are pushing into those areas, that could be a stall point in the S&P as well, irrespective of where it's trading. So if you are aware of the major swing highs in NASDAQ and Russell, then you can perhaps time an exit in the S&P, or if there is a real-time setup on the short side, perhaps, you can time it by using the areas of resistance in the other markets. So it would be helpful to at least, take a look at NASDAQ and Russell and be aware of just, the major areas in those markets. So those are the main ideas heading into the open. Let's see if the buy side can really maintain control and we can get continuation beyond 31 to 33. It's going to be difficult to catch the continuation move from here on out, simply because the market's trading at very aggressive prices, and it's really going to rely on momentum. If there is a lack of upside momentum, that would be enough of a reason to, at the very minimum, stay out of initiating any longs at these higher prices, because that would be at that point quite risky. So those are the main thoughts heading into the open. Let's see if the buy side can maintain control, and we will take it from there.